Are you ready to buy your first house? Well, brace yourself because home ownership is a life-altering adventure. It's also the grand entrance into the realm of security and wealth. Because it's likely the largest purchase you'll ever make, there's some things you should know. So today, I'm going to guide you through the process of buying a house and teach you how to avoid the common and often costly mistakes. Buying your first house is a defining achievement that will transform your life, and it's a fast track to building wealth. As Andrew Carnegie famously declared, 90% of all millionaires become so through owning real estate. That's exciting, but it's not all about the money. It's hard to describe the positive impact homeownership will have on you and your family. There's something magical about having a place you can call home. Without a doubt, buying a house will be a defining moment in your life. Watch to the end, where I'll share an incredible strategy for getting the best deal possible in this market, along with the many incredible benefits of homeownership. As I mentioned, owning real estate is one of the fastest, safest, and easiest ways to build wealth. If you're currently paying rent, this mind-blowing data from the Federal Reserve should be your wake-up call. Did you know that homeowners are 40 times wealthier than renters? I didn't say 40%. Homeowners are 40 times wealthier. That is a staggering number. And for millions of Americans, it's the difference between living a life of poverty versus a life of plenty. When you're done watching this video, you might want to watch why paying rent will destroy you. Okay, if you want to buy a house, you'll need to consider several factors along with various expenses. I'll do my best to keep things chronological. Number one, down payment. Hopefully you've been saving your money. In most situations, you'll need to put down a large deposit. This is usually a percentage of the home's purchase price. The type of loan that you qualify for will define how much money you'll be required to put down at closing. But you should be prepared to have a minimum of 3.5% to 5% down. On a $400,000 home, that's $14,000 to $20,000. Number two, good credit. Your credit score is how banks judge the likelihood that you'll pay your bills on time. If your score is too low, lenders will not approve you to purchase a home. And the higher your score is, the better interest rate that they'll give you. A better rate will decrease your monthly mortgage payment. In other words, you always want to make your payments on time. Number three, pre-approval. Before you start looking at homes, you'll want to speak to a lender to get pre-qualified. Your bank or lender will tell you how much home you can qualify to buy. They'll also explain the many different loan programs available to you, along with the advantages and different scenarios of each. For instance, if you can put 20% down, you'll avoid mortgage insurance and get a better interest rate. Number four, real estate agent. Your local real estate expert can help you quickly find the best properties available and schedule appointments for you to see the homes. When you find a property that you like, they'll prepare your offer and negotiate the best terms. Once your home's under contract, they'll make sure you don't miss any of the required steps. But let's not get ahead of ourselves. Number five, home search criteria. Before you start your search, make sure you make a list of your wants and needs. This should include the location, bedrooms, bathrooms, and the most important features. This might be things like yard size, 3-car garage, gourmet kitchen, grandmaster bathroom, and things of this nature. Remember, you can't always get everything that you want. That is normal, and it's okay. Pro tip, by searching outside of your preferred area, you may find the perfect home at a much better price. Number six, submit an offer. When you find a house that you love, you'll need to prepare an offer along with the other legal documents to make it official. It's okay to ask for a discount or incentive. I do it for my clients all the time. But if you find a house that you love, I warn against being too aggressive. If you upset the seller, they may refuse to sell their home to you. Once your offer is accepted, it's not over. There's still a lot to be done. Number seven, earnest money. When your offer is accepted, you'll be required to put down a deposit. This shows your commitment to purchasing the home. This money will be applied to your down payment, and it can be refunded as long as you put certain conditions in your offer. Your realtor will make sure the contract's written to protect your earnest money and allow you to cancel if needed. Number eight, due diligence gives you some time, usually a few weeks, to research the area and take a deeper look at the property. The seller is usually required to send you a list of disclosures regarding past or present issues with their home. You can ask the seller for clarity on these items. And should you find something that you deem unacceptable, as long as you cancel before the due diligence deadline, you should get all your earnest money back. As part of your due diligence, I always recommend that you do a number 9, home inspection. An inspector will find potential problems and concerns with the property. You want to order the inspection immediately once your offer is accepted, so you have time to resolve any concerns with the seller. You can also send a list of the items that you'd like the seller to repair or replace. Hopefully they agree. Often, there's some negotiation at this stage. If the seller is unwilling to fix the issues, or if you find something that you deem unacceptable, you can cancel and get your deposits back. Number 10, the financing and appraisal deadline gives your lender time to confirm that you qualify to purchase the home at the agreed upon price. Lenders often require an appraisal as well to ensure the property's value aligns with the loan amount. If the lender can't qualify you for the house, or should the appraisal come in too low, you can cancel and once again get your earnest money back. But when appraisal comes in too low, the seller may be willing to reduce the price to get the deal done. Or sometimes both the buyer and seller agree to meet in the middle. If you made it past this point, you're pretty much good to go. But you should be prepared for a few other things, starting with number 11, closing costs. There are various fees associated with closing on a home, such as title insurance, attorney fees, the appraisal, and more. And you'll also need to consider the costs that will be added to your monthly mortgage payment. This will include number 12, home insurance and property taxes. Your lender should share these additional costs with you before closing so you know what your monthly house payment will be in advance. It's important to understand that the property taxes and insurance can go up. When they do, you'll receive a notification from your mortgage company that your monthly payment has increased. If you're feeling anxiety right now, take a deep breath. The cost of rent increases much faster than the two of these put together. Number 13, homeowner association fees. If your new home is part of an HOA, there will be a monthly encumbrance for this as well. These fees can be hundreds of dollars per month, but you may have access to parks, playgrounds, a gym, a clubhouse, and a swimming pool, among other things. But some HOAs offer very little. Make sure you understand the rules before you agree to live in these type of communities, because these rules and regulations might not be agreeable to you or your lifestyle. Remember that these fees can increase as well. Number 14, utilities and services. Several days before you close on your home, you need to arrange utilities and other services to your house. Start by contacting the city, who often manages some of these services. You'll need to add garbage, recycling, water, sewer, electricity, gas, and internet, among other things. Number 15, moving cost. You'll also want to budget for the expense associated with moving your belongings to a new home. Depending on how much stuff you have, this can be time-consuming and expensive. Okay, last one. Number 16, emergency fund. Sorry, I feel like I'm piling it on here, but home ownership comes with responsibilities. You'll want to be prepared for home maintenance costs and unforeseen repairs. This fund will provide a financial cushion for unexpected expenses or changes in circumstances. You should always have a minimum of 3 months of expenses in reserves. It's important to note that the specific requirements and costs may vary upon your location, your loan program, and other factors. A real estate professional can provide guidance based on your specific situation. Now, I hope that this doesn't deter you from purchasing a home. Honestly, if I'd had this information before I bought my first house, I may have decided to just keep paying rent. But that would have been a huge financial mistake. The personal wealth that I've accumulated from the combination of making my monthly mortgage payment and home appreciation is astonishing. I'm not trying to brag, but I feel it's important to understand that the financial benefits far exceed the additional costs associated with home ownership. One of my only regrets is that I didn't start buying investment properties sooner. If I had purchased just one additional property in my early 20s, that home would likely be paid off, and it'd realistically be valued at $400,000, maybe even $500,000. I could probably charge $2,500 per month in rent, equaling $30,000 per year. And because rent increases over time, that monthly rent would continue to climb year after year. I can't imagine where I'd be sitting financially if I'd purchased 3 properties in my early 20s. Investing in real estate can be a powerful wealth building tool, and it makes millionaires out of more people than any other form of investing. When you're done watching this video, I recommend you watch 20 unbelievable benefits of owning a home. Okay, as promised, here's my number 1 strategy for buying a home in this market. Are you ready? It's the perfect time to build a house. Why? Because many builders have reduced their prices, they're offering crazy incentives, and they're willing to negotiate. But more importantly, it will take 8 to 12 months to build your house from the time of contract. Since mortgage rates are expected to fall in 2024, your payment on a new home several months from now should be hundreds of dollars lower than if you purchased a home today. Not only that, but it also gives you extra time to save and prepare for home ownership. If this sounds good, watch Get the Best Deal, Building a House Doing This. Look for the links to my recommended videos below. Before I bring this video to a close, I feel it's important to explain why waiting to buy a home could be a colossal mistake. Mortgage rates have been dropping for several weeks now, and they're falling fast. As rates continue to decrease, more buyers will enter the market, and prices will increase faster. Not only that, but we're also quickly approaching the normal buying season when loads of buyers naturally enter the market. It can be frustrating to buy a house when things are going crazy. If you purchase a house before the market shifts, you will get a lower price. Sellers will also be more willing to negotiate, which might include paying some, if not all, of your closing costs. This could easily save you tens of thousands of dollars. Those who wait too long could find themselves fighting over a very limited amount of available homes. If you're looking to buy, sell, build a home, or invest in Utah real estate, I get contacted all the time. Please feel free to call or text me with your questions. I'd love to meet you, and I'm honored to serve you. For everyone else, please feel free to share your thoughts in the comment section below. If you have a friend or family member looking to buy a house, you can easily text this video to them. And please don't forget to hit the subscribe button below and ring the bell to be notified each time I post new videos. Also, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to ring the little bell below. It'll make you feel good.